Hey everyone, John Henry here, slingshotfutures.com. Today, I thought we would do something kind of cool. It's been a while since we've done this. We're going to do a candle-by-candle reading on the S&P, just to kind of get a feel for how the markets are moving. Even in these periods of massive volatility, price action trading, psychological trading, in the general approach to it, stays the same. There's still people behind these candles, and that's what makes price action trading so powerful. So looking at this move for today, right? If we go backward a little bit, so we make it so we can't cheat, right? Let's get rid of all of this other stuff here. Let's set that right side margin to 750, and then get rid of some of these indicators that would allow us to cheat. Can't have that. And we'll go backward a little bit. So what we're doing is we're looking at what's going on in the markets. And one of the first things out of the gates, as soon as we open up, we see a big gap down. Yesterday, for the most part, if we look at the value on that move, if we measure from top to bottom on the volume profile, we can see, and I missed a little bit of that first candle there. There we go. We can see that the majority of value is found down here, right? The value area is bottom weighted with a point of control, arguably 2 points of control, a little bit further down. So this late day rally here really didn't have a whole lot of volume in it. And then we gapped down back inside that value. And that's the big part that really keeps things interesting, because not only did we just gap down, it was an inside gap, kind of, whatever. But the fact that we inside gapped down inside of value, this is where things start getting really interesting, because now buyers who maybe missed this move up are thinking, hey, I got a chance to finally get back in this thing, right? Let's start potentially looking for some longs here. So it's a way that buyers can potentially re-enter. And it's also a way that, maybe if you were a seller yesterday and you held all the way through that rally, you're able to get out of break even. And notice where we're opening up as well, right? It's not like we're opening up in no man's land. We're opening up directly on top of the massive swing that we left behind the day before. So although this isn't the best looking bull candle, there's likely going to be a lot of interest, both up and down. I'm not expecting a strong bull move, a strong bear move. I'm not expecting much other than a lot of jostling back and forth. A lot of traders who were looking to be buyers buying into it, a lot of sellers trying to get out of break even, structural traders being back at that swing high, that triple stack swing high. They're going to be buying into the dip. A lot of traders are going to be approaching this very first candle with a lot of interest, right? So we got to pay attention to this first candle, see what happens. Immediately fails, right? Never triggered the high, never triggered the low. So we're kind of, if we combine these together, do a little bit of candlestick math as an example. We opened here, right? So there's the open of the body, and we're just combining these candles together, right? It made it up to a high of here, but it closed down here, and it had a wick on the bottom. So realistically, if we use a little bit of candle math here to understand what's going on, this is a really bearish indication. That's a strong bear bar that rejected the highs and is trying to push back down below this swing. Along with that, if we look at this swing cluster that we've got going on here, this could also be seen as somewhat of a twin reversal, where they tried to close outside of it and then failed right back in. So there are a lot of clues here that the sellers may be trying to come in, if they're able to push the market back down to maybe that point of control, back down to 2767. But the follow-through candle is a doji. Talk about disappointing, right? So we get a doji, which doesn't necessarily mean a whole lot. It's one of those situations that a lot of market participants, you've got to kind of look at it from that perspective of, well, we know a lot of buyers and sellers came in on the first candle, and sellers were given the second bear bar to the downside that might be a move lower, so they sell underneath it. And then they follow it up with a doji. They're kind of disappointed. It's not like it's a huge bull bar, so they're not scared, but they're also not super pumped about the trade. It's kind of like, well, okay, that could have been a little bit better. What else do you have, S&P, right? Show me a little bit more. And then we get a nice little inside bear bar to the downside, and that's a good sign. Sellers have a shot to try to take it lower still. The context is still there for the sellers, and the buyers are still a little bit underwater. Now, that said, one key thing here is that the buyers never triggered above the bull bar, and that means that a lot of traders aren't necessarily trapped. This is playing off of the people who were stuck yesterday or looking to get in and miss the move yesterday. So from today's perspective, we don't really have buyers trapped up here, but we do have potentially those earlier sellers over here that are trapped, maybe trying to get out of break even. Maybe that's why we formed a doji. But it also could be buyers who are buying down here off that structure. They're just trying to buy cheap. Now we get an inside bear bar to the downside, showing that the buyers might need to wait a little bit longer. We're getting a lot of wicking on the highs, and now we're not seeing as much wicking on the bottom. Sellers are gaining a little bit of emphasis here. But the next candle, sellers trigger in, and it fails back up. So put yourself in the shoes of a seller who took the short below the second candle of the day, right? Doji first candle, okay, whatever, not that big of a deal. Strong second bear bar, awesome, right? Now we've got our context back. We can look for those targets back at the lows, maybe a little bit further. And then you get this, where now you're negative again, right? You were in the trade, and then you were negative, and then you were positive again, almost made it down to the lows, and now you're negative again. You're starting to think, get some second guesses on your trade. You're looking at it, and from, again, being empathetic from a psychological standpoint, sellers aren't very pleased with that. That's not good. But at the same time, buyers aren't succeeding at anything. So we're starting to get some clues now that we're more of a range, right? We're not necessarily looking for a trend at this point in time. We're dealing with more of a range, and that range looks to be right around here for now until we get a little more info. Buyers are weak, sellers are weak, but we are seeing still, even with this bull bar, a lot of wicking. Sellers are trying to push the market down while the buyers are trying to hold the market back up. So we're in a range. We need a little more info. Buyers try pushing up again, but weak bull close. It's not good. Now, notably, this did trigger in buyers. It went one tick above the high, so buyers are now in for sure, right? There's no questioning. So we know that buyers are potentially getting in on this bull bar, and they're looking for a reversal, a red to green move where it opens, drops down, and then goes up, maybe to fill the gap way up there, right? Those buyers are still trying to get that sentiment back up. But if we look back at that previous swing high, what didn't they do? They weren't able to get back above that previous swing high. Well, that was the breakout point. That was the whole reason why this failed to go low or failed to go higher the first time. And now they're not getting above it with a weak bull bar. That's a problem. And on top of everything else, we have a pocket of wicks, right? A pocket of wicks meaning, see all of these kind of creating this zone of resistance, just like down here. We have a zone of support down here. We're fighting, right? The sellers are trying to push back against the buyers, and the buyers are trying to push back against the sellers, and we're in a fist fight. We need more info. Weak bull move to the upside ends up being a bear doji. And again, further adding more to the wick army that we have on the highs and the lows. We're still fighting. Nobody's won the fight yet. Buyers are trying to push up through a new high. Sellers are trying to push down for a new low, and we're just stuck smack in the middle. Really good bull bar here, right? But like we always say, I want to see the follow through. I don't care if the bull bar is good if the follow through is horrible, right? So what we have here is this pocket of wicks, and they're finally breaching it. This is the first time that they've been able to close above those wicks. So what is the reaction? Do buyers come in above the highs? It is buying pretty high. You're buying at basically the high of that range, so I don't want to be a buyer here anyway. But what's the follow through? This might be an opportunity to see a breakout pullback, right? So we're definitely interested. But we need to see some good follow through to really push it through back above this swing high, which they closed above, and really kind of start putting the nitrous gas pedal down to the floor. And they don't, right? We have more weakness again. Never triggered in, actually no, it did trigger in the buyers by one tick and then rotated back down. Did it? Man, that's so tiny. High was at 2809, 2809 quarters. So it hit the buyers to the tick, right at the high of the range, and immediately pushed down. So not only are buyers in here, but they're also potentially in here. And between those two entries, they're sitting basically at break even, just a little bit below break even, trying to get that breakout move to the upside. So a lot of buyers, when they see this weakness, they don't want to see it close underneath 2800, big psychological level, but also back underneath that previous swing. So if we do, there's going to be some problems for the buyers, and shorts may start pushing into the market to re-challenge this 2792 area. Sellers start coming in, buyers get a little bit nervous, right? Buyers are underwater now based on their average, and they're dealing with a little bit of an issue here. The move to the upside is beginning to show signs of failure, and that's a really, really big problem. We're also back below the major swing high. We're back inside that pocket of wicks. There's a lot of problems with this failed attempt to the upside. Buyers may be choosing to exit underneath this, which means if it wasn't in the middle of the range, it might be a nice shorting opportunity. Or you could wait to see if it'll pull back a little bit further and give you a better fill. Maybe back to retest 2803 quarter, right there. Get back on top of that inside wick. Might be a nice little shorting opportunity. Never actually gives it to you though. Crashes all the way back down to the lows, and now we're challenging this pocket of wicks, right? This pocket of wicks is next. The ones on the highs just failed. So we have to give the benefit of the doubt to the sellers. The buyers just failed. Chances are sellers are going to make a pretty good attempt at trying to crack through these buyers now. So it's very important to see what the follow through is. And they got it, right? They got their breakout. The first time that they've been able to close beyond this pocket of wicks. Now let's see what happens with the follow through. Do they pop back up, just like we saw on the highs, or do they continue? They pop back up, just like on the highs. All this really confirms for us now is that our range probably got a little bit wider. That's all it did. Right? The sellers had their chance to try to take it lower, and they failed. We now know that we're dealing with a potential range, and buyers will begin coming in down here on this failure, knowing that they can buy really cheap with a stop just below the lows, but a target easily 2, 3 to 1 back to the highs. So high probability or high reward versus risk traders are going to be coming in down here if we can get a shallow pullback to at least 27.8275, right? Anywhere down in this new pocket of wicks that we have. We get the pullback, buyers defend the lows, that is also the low of that potential new range. And we see that buyers are pushing back again, just like on the highs, right? But this is a little bit more interesting because we closed back above that swing, right? We broke out of the swing, twin reversal back up, but it didn't trigger in the buyers. And it closed back down again. So any buyers who are in long on this are thinking one of two things, or potentially both. If I am a buyer, I might want to reduce my size a little bit. Just in case it flushes through the lows, I can buy a couple more on a dip. But at the same time, depending on what the follow through is, if it's another strong bear bar to the downside, this could be seen as bull failure, and we might be pushing down to that 27.67, maybe even the lows of yesterday's value to 36. So buyers really need to step up to the plate here, or they're going to lose some of their grip. Big bear bar to the downside. Remember, the single candle by itself doesn't matter as much as seeing the response to this move, right? Bears trying to crack underneath this pocket of wicks. Now are they able to come back? If we go to the next candle, there we go. We can see, wow, a lot of failure, a lot of wick back to the upside, and look where it went, right? Buyers who bought the close of this bull bar were given a chance to exit at break even. Sellers who sold underneath this previous bear bar have closed in profitable territory. And a lot of the buyers that were buying into this move are thinking, ooh, crap, that's not good. We have an outside bear bar, meaning that it went completely outside of the previous candle, actually went completely outside of a couple candles, back to the downside. There are aggressive sellers that will sell this move to the downside, but the problem is support's too close. Right? So a lot of sellers, or buyers in this case, who may be on the wrong side of things, are looking at this thinking, okay, I can give it a little bit of wiggle room, but if it starts breaking through that, we're going to run into some trouble, and it's one of those situations that I don't necessarily want to be in anymore, and they might start choosing to exit. So there's a lot of things going on here with this kind of interim battle. That was a big, nasty wick on the top, and that's going to throw a lot of people off. So we're going to have to pay attention to that. And the high and low of that wick is going to be an area of interest, right? So if we look, just like the pocket of wicks up here, this top is going to be a zone of interest for us. We know sellers defended there. So if they crack, likely we're going to get a bounce there later. More weakness to the downside. Sellers who sold underneath that big breakout candle, not feeling too good. Sellers who sold a little bit earlier they're feeling okay, but it could have been a lot better. Buyers aren't really that scared. The move wasn't that big. So what? Maybe this is just a pause before another big leg down, but a lot of buyers are still kind of on the sidelines thinking, well, we've got that support down there. We've got the pocket of control. There's structural support down here. Maybe we give it a little bit more wiggle room. There might be that opportunity to exit a little bit, right, and enter to reduce your risk, and then enter more contracts if it dips down to the next area of support. Hits the next area of support, hits the point of control to the tick, and then fires right back up again. Very, very strong bullishness right back up, which leads us to believe that the range probably widened out a little bit more. We don't know if we have a range yet, but it's starting to look pretty good. And if anything, maybe we have a descending wedge that's kind of working out at the moment. Right? Strong bull bar back up. That's going to shake the confidence of a lot of these sellers that tried shorting for a breakout. That weren't paying attention to the point of control. So those sellers are going to start exiting if it starts flushing back above that 82.75 area. They don't want to be short above that anymore. Their short was for a breakout. If they start failing up here, that's going to be a problem. Starts failing up there, but big bear bar back down again. This could be the opportunity for sellers to get out at break even, right? This is their chance. Now, this might have also been a chance for some buyers to get in, maybe get stuck in. Maybe this is a bull trap before a wash. The fact that we're bouncing off point of control makes it a little bit harder for the sellers, but I'm looking at this more along the lines of sellers are being given a chance to get out of break even. They shorted underneath the breakout bar, they shorted a little bit lower. Anywhere inside of there at the low of that kind of range that we have drawn up is likely going to see some bouncing, and those are the sellers getting out at break even. There's your bounce off the lows, sellers getting out at break even. Further proof that sellers got out at break even with a very strong bull bar up. Buyers will be buying above this, looking for a continuation leg to the upside to see if they can get to the top of the range now. Getting a little bit more proof that this is the range low. Bad follow through, but also bad bear bar. No sellers want to get in underneath that, and that looks to me like that was another break-even attempt. Sellers tried shorting underneath this bear bar looking for continuation. It failed, and they got out. So the fact that they got out and it closed as a weak bear bar adds emphasis to the previous bull bar. I would rather be a buyer here looking for a continuation up, knowing that sellers are getting out of the way. The more sellers that get out of the way, the less resistance there's going to be on an up thrust. We have a big, strong push down. This is the first time that sellers have really been given a chance to actually get some profit, right? Especially the sellers who sold way down here. This is the first time that they've finally been able to get something out of the trade. The follow through, right? What happens after this candle plots? Does it immediately flush back up? Is this a washout? Or is this the beginning of a very strong move to the downside? Big move to the downside, right? So really, really good strength to the downside. Now sellers who are in greed mode. Buyers are stuck and they're getting squeezed. Sellers are in and they're looking to squeeze the buyers. The further they can push this, the better. Now here's a problem. We have a bear descending wedge that is breaking lower. That takes an extreme amount of selling pressure to actually hold that type of market structure. Having a bull or bear market structure that breaks out in that direction is very, very difficult to sustain. It takes a lot of money to do that. So the fact that this is breaking down below a wedge low, that's fine, but if I'm a seller, I'm starting to get a little bit weary. Maybe we're going a little bit too far too fast. We're also starting to come into that pocket of wicks from the day before. This is where a lot of buyers put up a boatload of defense right on top of that point of control. There's a lot of stuff going on here that if I'm a seller and I start sniffing out some weakness, I don't know that I want to be short anymore. That's some weakness. So if it comes back down to the lows or even above this bull bar, sellers will start exiting. Came back down to the lows, sellers exited, and that caused it to go up through the top where more sellers started exiting. Again, I don't think the buyers are necessarily scared. They've already been given plenty of chances to lower or mitigate their risk, lower their position sizes, get out of break even. Now they have time to reassess. We do have a 3-push bottom with an overextended third press. Again, not sustainable typically for the market. So if we can get this to push back and give us another bounce, that could be a phenomenal area of interest, but buyers will already be building in here, assuming that the sellers have failed. Continuation back to the upside, very strong 3-bar push. Now we're starting to get the buyers who are buying for any reason. 3 very strong bull bars. This is the strongest bull response that we've had the entire day. And it's starting to get a little bit more interesting because now we're back inside that potential range. We're back above yesterday's VPOC, which failed to break down. We've got a lot of reasons why the buyers are coming in here, not to mention the structural support down here that hit and held. So if we can get another pullback down into 2762 in that area, that's going to be a big zone of interest to see if the market can flush back down into that area to pick up. Bear bar back down, pretty heavy bear bar, but 3-bar bull string. It's going to take a lot to shut that bullishness down. Bears come down, they tap 61, 62. Buyers reload, push the market back up. Now we're back to value lows again. If it cracks above that, chances are we're probably going to make an attempt at trying to crack through some of this pocket wick going on back up into the 90s. Right? So buyers reloaded down there at 61, 62. Now they're pressuring back up to see if we can get a push. Failed to push, but again, weak bear bar, trapped the low. Now we're back up again. If you weren't long before, buyers will definitely be buying above 76 because now we have trapped sellers. Not only did we trap sellers from before, but those sellers were given a chance to get out at break even. And if these sellers weren't paying attention, they just got dumped on, right? These sellers handed these sellers the bag. Here you go. I don't want to hold it anymore. You take it. I'm not a bag holder, right? So now these sellers are holding the bag and the market's reversing against them. There's going to be some exits above that green bar, that bull bar, while those sellers begin to exit. Flush back down again, but this is where things get very interesting. Where did that wick stop? right? If they entered in below that bear bar, it came a hair away from their break even, right? Just tickled it a little bit. How much more frustrating is that, right? We've all been there. I'm in a trade, it went negative, okay, not that big of a deal. Comes back, looking to get out of break even. I want to get out of break even. I know I'm wrong, just get me out. 1 tick away from break even, 2 ticks away from break even, and then starts reversing back up. You're like, ah, crap. You start getting frustrated because it missed you. So what are you going to do? You're going to start exiting above the bull bars. Right? Get out, right? Just take the loss. It didn't work, time to exit. Buyers know this, and they're likely going to be buying above that as well to try to push it higher. But don't lose sight of the fact that the market is pulling down a little bit. Look at all the wicks all over the place. Why would I buy above the high of this when I can try to buy a little bit of a pullback, maybe back to 72, right? You got to think what the market's doing and kind of respond in that way. Gave you a little bit of a pullback from 78 down to 75, and that's actually the current market right now. So we're looking at a lot of sellers who are potentially underwater right now. We're pushing back up into value, and it looks like the next area that we're going to challenge is right up there at 91, and that's where things get even more interesting. So a lot of really cool things going on here, and even though we're dealing with a hyper volatile market, and the markets are going crazy and they're jumping all over the place, market psychology, understanding the people behind the trades, still prevails and still gives us an opportunity to further understand what's happening so we can respond accordingly. Very good practice to do. If you don't do this, I would highly recommend that you do, so you kind of understand the language of the markets and really kind of figure out, hey, what are these things doing, right? I know it's going up, I know it's going down, but why? And this is where you learn those answers to those questions. That's going to do it for this one, though. I hope you found it useful, interesting. I know it was a little bit long, but hopefully entertaining. Yeah, that'll do it. If you have any questions about it, shoot me an email, jbrink@slingshotfutures.com. Until the next one, we'll talk to y'all later. Thanks.